Okay, so as I mentioned before, my name is Rachel Gustafson. I am a financial planner here at Financial Investment Team, and I'm going to be guiding you through our presentation today. I am a certified college planning specialist, which means I went through additional schooling and a certification program to learn all about college education planning, how to save, how to pay, so on and so forth. You're going to be seeing a quick poll question pop up. So I'm going to pop it up for you. And what I want to know is, who are you planning for? Are you planning for yourself? Are you planning for your kiddos? Or are you planning for someone else? Take just a moment to answer that. All right, looks like we're planning for our children. Whether you're a student, a parent, a family member of a student, you will find the information I share today really, really helpful. This is going to be the first session of a two-part series. So today we're going to spend a good chunk of time on the FAFSA, the CSS profile form, expected family contribution formulas, and things to prepare for. Next Thursday at 11:30, I'm going to be hosting the second part of the series, Saving for College, where I'm going to discuss ways that you can save, accounts that you can save in, and some strategies that you can use. A little bit about Financial Investment Team. We specialize in building really customized plans for our clients, and we offer financial education much like today. So if you aren't familiar with the Certified Financial Planner designation, which I have, I went through extensive training and experience requirements, and I committed to the CFP board's ethical standards that require us to put our clients first. We really believe that no matter your financial situation, you belong and deserve a financial plan. And so that's what we do to help our clients. So we're going to jump in. Paying for college. I do have one more poll question that I'm going to pop up for you on your screen. I want to know where you are in the college planning process. Are you applying this coming October, which is opening up here in just about a week or so? Are you going to be applying in the next 1 to 3 years, or is it beyond 3 years that you'll be applying? This just gives me an idea of who I have on the call with me. Okay, so it looks like 67% of you are planning within the next 3 years to be applying for the FAFSA, and about 33% of you within the next 1 to 3 years. Great, perfect. So today will be helpful for all of you on the call. So what I'm going to start with is the types of financial aid. There are two main types of financial aid. There's self-help aid, which consists of interest subsidized loans and work study. And then there's gift aid, and this consists of grants and scholarships. This money does not have to be repaid. Think of it as free money. Now, the amount and type of financial aid that you receive is based on two factors. The first is the merit of your students, so scholastic, athletic, musical. Do they excel in one of these areas? The second is the financial need of your student. Now, this is the most important factor in determining financial aid. Most of the financial aid given by the federal and state governments is based on the financial need of your student. Also, most of the financial aid given by colleges is need-based. So what we're going to talk about is what goes into the needs analysis. What is the process? If it is determined that your kiddo has no financial need or adjusted financial need, which we'll talk about, then they won't be eligible for most types of federal, state, or college financial aid. So this is an example of the needs analysis equation. So I'm going to read through it and then I'll explain each of these. So you take the cost of attendance for the college that you're applying to. They're going to subtract out what they have decided your expected family contribution is. And this is going to give you your financial need, what you need to pay for college, according to them. And then they're going to subtract out the resources of your student, which we will define a little bit later today. This is going to give you your adjusted financial need. A couple of things to know here. Tuition is just the cost of classes. Cost of attendance consists of tuition, fees, room and board, books and supplies, personal expenses, cost of a computer, transportation, so on and so forth. Each college must furnish this to you when you are applying, what your cost of attendance is going to be. A school's cost of attendance is not the sum that every student pays out of pocket. So even if your dream school's cost of attendance seems impossibly out of reach, that doesn't mean you shouldn't apply. Okay, need proof? There was a recent study of 366 private colleges and universities, and this was conducted by the National Association of College and University Business Officers, and they found that only 11% of undergrads paid the sticker price at these private schools. So I'm going to show some examples, but don't think that because a private school has a really high sticker price that it might not be within your budget. Next, we're going to talk a little bit about expected family contribution and what plays into that. So this slide may look a little overwhelming, but I'm going to walk you through it. So expected family contribution is how much the family is expected to contribute to the total cost of college for that singular year, okay? Think of it as the family's college tax liability, okay? So the EFC, as I call it, is computed by using family financial data that is going to be submitted on your financial aid application form. So let's walk through this. You have the parent's adjusted gross income plus untaxed income and benefits. And so this untaxed income and benefits, we'll talk a little bit more about this on another slide, but it's things like if you have bonds and you're not paying interest on those bonds, or you're not paying taxes on the interest that accrues for those bonds, or things like contributions to your 401k, these are going to get added back into your income. And then you're going to subtract your income allowance. And it's not a very big income allowance. It tends to be pretty small. So you'll subtract that out, and it also depends on how many kiddos you have going to school, what your income is. So it's a little bit different for everyone. And then you're going to subtract out federal, Social Security taxes, state taxes, and certain employment expenses are subtracted out. And then we multiply it by 22 to 47%. And this percentage is determined by your income. So parents' contribution from income is what you end up here with that first column there. That's what they are expecting parents to contribute to the tuition of the child, or the cost of attendance of the child. Then, after they've looked at your income, they're going to look at your assets. So your financials, what do you have in your 401k doesn't count, but things like your bank accounts, if you have a taxable investment account, there's a lot that plays into assets we'll talk a little bit about. But they're going to take your assets and they're going to subtract out the asset protection allowance, which this year was $9,400. So it's not a very big protection allowance. And then they take that total amount and they're going to multiply it again by the 2.6 to 5.6%, again, dependent on income. I usually will multiply, when I'm working through this with clients, I usually will multiply it by 5.6% so that there's no surprises down the road. That seems to be the most common. So that's the parents. Then they look at the student, okay? So they're going to take the student's gross income plus any untaxed income and benefits, kind of like they do with the parents, and they're going to subtract out no income allowance. The student doesn't get one, but they will subtract out federal and state taxes, Social Security taxes, and then they're going to multiply it by 50%. So it's a much higher percentage for students. They're expecting the student will be able to pay 50% of their income towards going to school. And then they're going to look at the student's assets, and they're not going to subtract anything out of it, and they're going to multiply it by 20%. So then on the far right, we have all of these ending amounts, right? We have the parent's income, we have the parent's assets, and the child's income and assets, and we're going to add those together, and it's going to give us the total expected family contribution. And this is what schools, federal government, they are expecting you to pay out of your own pocket for your kiddo's school. So here's a needs analysis example. So you have your cost of attendance, you're looking at a school, you know what the cost of attendance is. We're gonna say it's $15,000 for that year. Your expected family contribution has been calculated as $7,000. That's what you're expected to pay out of pocket. And so your need for your kiddo for that year is determined to be $8,000. Now, in this example, they're subtracting out resources. Let's just assume that this student got a private scholarship of $1,000, maybe from from a private foundation that wanted to give $1,000 to your student. And so that gets subtracted out as a resource, and it's a dollar for dollar subtraction. So if you received a $1,000 private scholarship, then $1,000 is subtracted from the need. And this gives you your adjusted need. So this is the need that you have that has been determined that you will need for your child to go to school. This example, it illustrates two specific colleges. I used a public and a private college just to give you an idea of what you might see. So financial need, again, is the total amount of financial aid that the student is eligible to receive. So we're going to look at Public State University over here on the left. I'm going to get my highlighter here. The total cost for public university is $18,000. Your expected family contribution was calculated to be $5,000, so the need is $13,000, okay? Now, this particular school is only going to cover 80% of your need. So financial aid eligibility is going to be determined to be $10,400, and for this school, they are deciding to do 20% gift aid, and again, that's free money, and the rest is going to be the self-help. Okay, so the out-of-pocket cost for public school is going to be $7,600, right? So the true cost, which is your total cost of $18,000, and we're going to subtract out the gift aid, is going to be a true cost of $15,920. That may not necessarily be totally coming out of your pocket. There may be loans included here, but what we're looking for is that true cost. What are you going to be paying, whether it's in loans or whether it's out of your pocket? And so that comes to $15,920 in this specific example. Now we're going to look at a private college. And private college for this scenario costs $36,000, so double the public school. Your expected family contribution is the same. It's about $5,000. So your need is $31,000, quite a bit more than the public school. Now, the private school, however, has decided that they are going to cover 100% of your need. So your financial aid eligibility is going to be 100% of that $31,000. And they actually are going to give you a higher percentage of gift aid, 73%, as opposed to the self-help of 27%. So the self-help, again, that's going to be your loans that you take out, or it's going to be funded from your own pocket. So the technical out-of-pocket cost here is going to be $5,000 versus $7,600, and the true cost ends up being this $14,300. So even though the sticker price of the private college was quite a bit higher, they ended up covering much more of the need than the public school did. And there's a lot of different reasons. Private schools can tend to get, they have more funds to give away. Also, they're trying to contend with the public schools. If your student has really fantastic athletic ability, or if there's merit there, then that also will lend to the school to be giving more. Okay, so I mentioned we were going to talk a little bit about student resources. So student resources are sources of funding outside of the family's income and assets. So things that the student has available that the college feels like the student can use to pay for college. So colleges will lower the financial need of your student on a dollar for dollar basis for the amount of any resource of the student. Some common examples: private scholarships. So if you get a private scholarship to the Chamber of Commerce or another foundation, those are counted as resources. Cash gifts, and this one's often surprising for people, but cash gifts paid directly to the college for tuition from outside the immediate family. So for example, if grandparents pay tuition directly to the college, that is counted as a resource and can actually reduce the amount of financial aid your student gets. So when I work with families and grandparents on when they want to gift for their grandchild's education, I usually encourage that they either A, put it into a 529 or some type of an education vehicle. And just a brief note on 529s, they're only counted as that 5.6%. It is an asset, but it's an asset of the parent, not the student. So it's only counted at 5.6% on the high end. And so I'll usually recommend that it's either put into a 529 or that they wait until the student is done with school and then they repay back student loans. I often hear, well, there's that $15,000 gift exclusion that the grandparents are trying to stick to. And I'll explain this, but $15,000 is how much you can gift to another individual without having to file a gift tax return. If grandparents are planning to gift more than $11 million, then they might run into some issues. But if it's going to be lower than that, they might have a lot more wiggle room than they think. So if you have a grandparent who's involved and wants to gift to your student, really important that you do it strategically. Something else that counts as a resource of the student is employer-provided education assistance programs. So if your employer is helping pay for tuition, and any other funds that the college feels your student has at their disposal to pay for college can also be included. So anything that's not listed within income and resources. So we talked about resources. That reduces dollar for dollar student need. Now we're going to talk about the income piece, and there are two types of income. There's non-assessable and assessable income, okay? So we're going to start by talking about non-assessable income. And these are examples of non-assessable income that are not going to be included. So I mentioned employer education assistance plan. So it's not counted as income, it's counted as a resource. So it won't be included in your income analysis. Loan proceeds, they're not going to include as income. Rollovers, so if you do a rollover from a 401k into an IRA, that's not included as income. Food stamps are not included. Gifts and support other than money. So if you're gifted money, that counts as income. But if you're gifted, for example, I'll use the grandparent as an example. Let's say they give your student an apartment. As long as the grandparent, it is in the grandparent's name, not in the student's name, that's technically a gift, but it is not going to be assessed in income. Gifts paid to the college for tuition, I had mentioned that before, it's not going to be included as income, but it is included as a resource of the student. So it will reduce directly dollar for dollar. Contributions to or payments from FSA accounts are not included. Federal and state disaster funds, insurance used for reimbursement of loss is not included. Financial aid proceeds, QTP withdrawals, non-qualified deferred compensation contributions. These are not accessible in the income calculation when you're filling out your financial aid application. So what is accessible? This first one is often surprising to people. Your current year retirement contributions are assessed as income. So if you have a 401k and you put the maximum amount, $19,500 into it, you're not currently taxed on it, but it is added back into the calculation when income for financial aid purposes is calculated. Your 401k assets are not, but current year contributions are. And when you're filling out your financial aid application, they are looking at the year prior. So if you were filling it out this October, for example, for your students next year, they are going to be looking at 2019 income. So it's going to be the previous year that they are looking at to determine income. So they would look at 2019's contributions. Withdrawals from retirement, pension, life insurance are also considered income. And I'm not talking about loans, I'm talking about if you take a distribution. Withdrawals from a Roth IRA. Also, if you convert your traditional IRA or 401k to a Roth IRA, that is considered income. Tax-exempt income is added back in. Workers' comp benefits, veterans' non-educational benefits, housing, food, and other living expenses or allowances are also included. Let's see, child support, US Series EE bonds. So if you're using the interest from those for qualified educational expenses, they're including that in your income as well. Some income exclusions would be the gain on your personal residence. They're not going to include that in income. Okay, I'm going to do a little poll for us. Just a little checkpoint. Which of the following are considered assessable income? Rollover from your 401k or a $6,000 contribution to your 401k? Yes, looks like we got it. 100%, great. 6,000 contribution to your 401k is going to be considered income. Okay, so we're going to jump into admission and financial aid. I like to break it down into 3 steps. So step 1 is you're going to apply for admission to colleges, okay? You have to apply in order to receive a financial aid award and apply early. Some schools will actually give you discounts for applying early. Most colleges' financial aid deadlines are February 15th or before. Not many family members have their tax forms completed by this time. So I often will see families say, well, we're going to wait until our taxes are done. And I always say, no, you need to apply early. Most financial aid is based on a first come basis. So what you can do later on is do a correction to the student aid report when you receive it. If your estimates on taxes and income was off, you can make changes to that later on. But the biggest thing here is apply early. Application forms must be filed in order to appeal as well. And so often this is the other question I get, well, I don't think that we're going to be eligible for financial aid based on income or assets or whatever it may be. And I always say, well, but you don't know what's going to change in life. Life can change at a moment's notice, right? We've seen that quite a bit this year. So I always recommend fill out the FAFSA, fill out the CSS profile form, even if you think you might not get anything, because if something changes later on, you can't appeal unless you filled out the application. So that's step 1 is applying to colleges for admission. And then step 2 is that fill out the FAFSA and fill out the CSS profile form, which we're going to go into detail here next. So the FAFSA, we've probably all heard of it. Every college requires the FAFSA to be completed. It's used to calculate the federal methodology expected family contribution. So there are 2 methodologies to determining what your expected family contribution is going to be. And this is for the federal piece, okay? It's used by all accredited colleges. It's going to determine your federal funds eligibility. The filing deadline for the form is usually June 30th of the college year, but it's going to open on October 1st. And I recommend if you can do it on October 1st, do it on October 1st. Jump online and fill it out. Colleges also establish their own deadlines. So if you wait too close to that June cutoff, your student could miss out on financial aid, except for the Pell Grant and Stafford loans, but other financial aid could be missed out. So apply as close to October 1st as you can. The student and at least one parent has to sign it unless your student is considered an independent student, which is defined as 24 years old, a veteran, a graduate student, married, a ward of the state, or parents have passed away. Other than that, you need to sign with your student. There are 3 ways that you can fill out a FAFSA. You can do it manually by completing the form. You can do it electronically through the college. Not all colleges have this capability, or you can just go online to fafsa.education.gov. That's usually the way that I recommend doing it. It's the quickest and easiest route. Now, you also, in order to be able to fill out a FAFSA, you have to be eligible for the FAFSA. So you need to, in order to be able to be eligible for federal aid, I should say, you can fill out the FAFSA regardless of if you have financial need. But in order to be eligible for financial aid, you do need to show financial need. To fill out the FAFSA, you need to have a high school diploma or a GED. You need to be enrolled in college, which is why the first step is enrolling or admitting to college. You need to be a US citizen or an eligible non-citizen. You have to have a social security number. You need to be making academic progress, and it must be used for educational purposes. Can't be in default of a federal loan. You could be registered with Selective Service if required. That would be a requirement, and not be convicted of possessing or selling drugs. So just eligibility for federal aid. Okay, so that was federal aid, the FAFSA. Now we're going to talk a little bit about the CSS profile form, and this is, I included 2 handouts about this. The first handout was what schools are eligible or use the CSS form. Not all schools do. It tends to be private schools. Nearly 400 schools use it, and this is going to determine non-federal aid. And so usually it becomes available on October 1st, like the FAFSA. And again, each school or program sets its own deadline. But you should submit it no later than 2 weeks before your school's priority filing date. So again, the sooner you fill it out, the better. It costs about $25 to complete it. Sometimes there are additional reports and costs, but generally speaking, it's going to be $25. And each additional college that you add to it is going to be another $16. And so I usually encourage students to complete it as close to October 1st as possible, and to apply even if you aren't sure that you're going to be going to the school that requires it. Because again, it's first come, first serve. The earlier that you fill it out, the better. We all know life can change quickly and nothing is set in stone. And just briefly, kind of interesting, currently the only school in Oregon that requires it is Reed College. But if you look on it, you're going to see at the list, you're going to see things like Yale and Duke. So private schools that have a higher sticker price tend to use the CSS profile form. And the biggest differences between it and the FAFSA is it's a little more strenuous. They're going to include more assets and more income that the FAFSA may not necessarily deem as income and assets. The CSS will. So just a heads up there. Okay, so you've applied to college, you've completed the FAFSA, you've completed the CSS form. Now you're going to sit and wait. In about 4 to 6 weeks, you're going to receive your student aid report. So this form is going to indicate what your expected family contribution is. Usually that's in the upper right-hand corner of the first page. If there are errors or your estimated tax information needs to be corrected, you need to do so on this form and make sure that it is corrected before you send it off to college. Because once it's corrected, you're going to be sending it to the colleges you're applying to. And just a quick note, about 30% of submitted student aid reports, they're going to ask for additional information to verify the information you have. So don't be surprised if that happens. But after you submit it to each of the colleges that your kiddo is looking to possibly attend, then you wait again. And you're going to receive and review the college's award letters. So you're going to get an award letter from each college. And this is where you can really do some really good work on comparing schools. Maybe you've applied to private colleges and to public colleges, and this is the opportunity for you to look at, okay, what am I really going to be paying out of pocket for each of these schools? And you might be surprised by what is offered private versus public. So you're going to receive and you're going to review these award letters. It's going to state the amount of financial aid and the types of financial aid that you're eligible to receive. You can accept, you can deny, or you can appeal any of the award letters that you receive. Each college has its own appeal process. So if for any reason you've received an award letter and you don't feel like it's right or something needs to be changed, then you'll have that opportunity to do so, and you'll just have to check with the college that you're appealing with. So where does financial aid come from? Aid is administered by colleges. Federal aid, aid that is administered by colleges consists of federal aid, about 66%. State aid is going to consist of about 6%. College aid is about 19%. And then that gives you about 91%. So financial aid is coming from about 91% is these categories. Aid administered by others, so maybe your employer is going to be about 6%, VA programs 2%, private scholarships really only consist of 1%, and that gives you a total of 9%. So student aid that we see comes from these places. There are two types of gift aid. And so just as a reminder, gift aid is free money, right? These are the things that we all want and hope we get. Gift aid consists of grants and scholarships. So just to give you a couple of examples, what falls under grants, federal Pell Grants, for example, can be up to $6,345, is dependent on income. You have to be looking towards achieving your bachelor's degree. A student with a bachelor's degree is going to be ineligible for the federal Pell Grant. Then there's the Federal Supplemental Educational Opportunity Grant, the CEOG. It's a grant ranging up to $4,000. It's also need-based, and also if you already have your bachelor's degree, you're going to be ineligible for this grant. Another college scholarships, college grants. These are given to students with merit as well as a need. Again, this is why it's really important to fill out your financial aid applications early, because that is going to be the first money that runs out and is given away. Colleges derive these funds from their endowment funds, through charities, or by giving a tuition discount. And so again, that goes back to apply early because you may be given a discount for doing so. Often they're non-need based, and they're really used to lure students in, especially with special talents or merit. So if your kiddo falls under this special talent or merit, applying early is going to give you more opportunity for college tuition discounts. College loans, the things that we try to avoid, but most of us will probably end up with a little bit of, fall under need-based versus non-need-based. So need-based are going to be your federal subsidized loans. They're going to be fixed rate. They're going to be need-based. You can borrow up to $5,500 for your freshman year, $6,500 for sophomore, and $7,500 for junior and senior years. The interest is going to be paid also known as subsidized by the federal government until 6 months after you leave school. So if you're going to be doing loans, these are the preferred loans because you're not going to be paying interest while you're in school. Federal Perkins loans, they're low interest, need-based loans as well. The rate is fixed at 5%, and it can be up to $5,500 per year. And again, the interest is subsidized while you're in school. So need-based, you're not going to pay interest while you're in school. You usually don't start paying interest until 6 months after you've left college. Some colleges have student loan programs. The terms and rates of those loans really vary with each individual college. So just know that. Non-need based college loans, federal plus loans, federal unsubsidized loans, and state loans. So federal plus loans, this is the parent loan. So if your income is too high to be eligible for the needs-based loans, you may be eligible for the plus loans. They are not need-based. The borrower is going to start paying the interest while the student is in school, and repayment begins 6 months after the student leaves college. And these are in the parent's name. So you're taking on that risk. Unsubsidized Stafford loans are not need-based. There is no financial need. The student can still receive an unsubsidized Stafford loan. You have to apply, fill out the application, the FAFSA, in order to receive this loan. So even if you think that you may not get financial aid, free financial aid, if you want to be eligible for the unsubsidized Stafford loan, you have to fill out the FAFSA. And the main difference is you're going to be paying interest for this loan while you're in school, where the subsidized Stafford loan, you are not paying interest while in school. The federal government's going to pay that. Interest rate and repayment terms are the same on the federal subsidized Stafford loan. It's just the main difference is who is paying interest while the student is in school. And your state may also offer loans as well. So that covers your loans. Now we're going to talk a little bit about work study. Federal work study, it's usually about 8 to 15 hours a week at minimum wage. Colleges administer this need-based program. Okay, so that's the federal work study that the federal puts on, your college administers it. And then colleges have their own work study. It's usually a work program set up by the individual college. It can be based on the need or the merit of the student. Each individual college sets its own work variables. So there's federal, there's the college, and then your state may also have a work program. Something important to know here, a lot of us will have students that go to college and also work a little bit on the side. Well, need-based work study is not assessed in the EFC formula. So really, really important when a student is considering work study employment versus off-campus employment, you need to factor this into your decision. Because maybe you're going to get paid a little bit less with the work study, but it's not going to affect your financial aid eligibility. So that's an important scenario to look at. The employment off campus could reduce the financial aid by 50% because again, they're going to multiply your student's income by 50%. 50% is what they are expecting your student to put towards financial, towards tuition cost of attendance. So this slide talks about order of filing need. Colleges replace their own scholarships with any private scholarships. So these are scholarships that the college itself has not awarded. So if your student receives these, they're going to replace their own with that. They consider private scholarships to be a student resource. So a private scholarship will not increase the amount of money a student has available for college. I will say that if your student has received a private scholarship, and they have included it to reduce what they're going to offer you, you can actually appeal it with the financial aid office. So your student may be able to get the college to disregard the private scholarship. It's case by case, and it really depends on the school that you're applying to, but just know that you may be able to appeal that. The merit of your student is also a factor in determining the order that the college is going to fill your financial needs, but typically the college fills the financial need of a student in the order shown here, okay? The last four may vary depending on the merit of your students. So first, they're going to look at federal Pell Grants and state grants. Are you eligible there? Are you eligible for federal Stafford loans? Do you have student resources that we need to look at? Are you doing a work study? Federal Perkins loan. Then they're going to look at the federal SEAG grant. And then they're going to look at college grants or tuition discounts. So they go in a specific order, which is important because it helps you determine, is there a certain income or asset strategy that you can use that will produce grants versus loans? And this is something that I help my clients build out. Okay, let's look at your income. Let's look at your assets. What can we do strategically now to increase the likelihood that your student is going to get grants as opposed to loans? Okay, I did it all before 12:30, even with some tech difficulties. As you can see, there is a lot that goes into preparing yourself and your student for applying for financial aid. It can be confusing. There are several nuances that I didn't cover today. Today was more of an overview so that you can know kind of what to expect when it comes to filling out that FAFSA and that CSS, and what assets and income apply to that. So what formula should you be using to determine EFC? How should your assets be organized to ensure optimal financial aid? Should your child be considering an AP program, which we're going to talk a little bit about next week? Are you eligible for some of the education credits that are out there? The answer is planning, and planning now. Many people believe that all they need to do is fill out the FAFSA, wait for it to come, and that is what it is. But there is actually a lot of strategic maneuvers that you can make, even if you think that maybe your income's too high or your assets are too large. There are things that you can do to protect those things so that when you do fill out the FAFSA or the CSS profile form, you are increasing the likelihood that your student could get financial aid. So that brings us to the end of today. I'm going to open it up for questions if you do have them. Give me just a moment here.